Good morning, Algonquin College, and thank you so much for joining the Crypto and Coffee session today. As you know, our friend Ivan is going to be taking us through some of the basics of cryptocurrency as we enjoy some coffee. I've actually got some lemon water here. I probably drank too much coffee already today, but I highly encourage you to grab a cup of coffee, tea, whatever. It's going to be a really great session, and we're all going to connect and discuss cryptocurrency. So a few things to note about today's session before we get started. Ivan's going to be presenting for about 20 minutes, just covering the basics. And after Ivan's presentation, we're going to have an open Q&A session. So if during his presentation you think of a question and you're worried you're going to forget it, you can go ahead and pop it into the Q&A and we'll address them during the Q&A session. We will also be using the raise hand feature. So if you prefer to ask your questions out loud, I would just ask that you wait until the live Q&A session to raise your virtual hand. Closed captioning is available for those who need it. You can find that by using the closed captioning tab, the CC at the bottom of your screen. You are encouraged, of course, as always, to use the chat function throughout today's event. You already have something in common with every single person who is attending right now. You have an interest in cryptocurrency and financial wellness. So it is nice to know there is a common thread there. So feel free to share social media handles and connect with one another. This session is an introduction to cryptocurrency for beginners. So we won't be necessarily discussing any really in-depth questions or advanced questions about cryptocurrency. I know there's been a ton of really fun stuff in the media and great discussions on, the environmental ethics of crypto and the blockchain. Unfortunately, we just won't be diving into that type of information today. And finally, the last of my boring spiel, and then I promise we'll get into the session. For legal purposes, Ivan can't answer any direct questions about investments. He can't answer what you should invest in particular, but we will absolutely be able to answer general questions, and we'll see as the session goes on. So let's test out the chat function together. I see many people on this call, which is fantastic. So what I'm going to do is I'm going to ask you a question, and if you'd like, you can put in the chat your answer, and I'll count down, and on 3, we'll all put in our answers. So the question is, when it's safe to travel again, where is your dream destination? Where would you like to travel if nothing was a limit and you could travel after the pandemic? Where would you go? So I'll give you a second to type in your answer. I'm going to put mine in as well. All right. And go ahead. Oh, awesome. Some beautiful places. Vienna, Korea, Monaco, Las Vegas. I love that. I can't wait. I've never been to Las Vegas. I feel like everyone has. We'll get there someday. My home country. That's really nice. Italy. Montreal to celebrate with the Habs fans. Shameful. Awesome. Dubai. So many great locations. So much to look forward to and to save for when we're able to. Okay, so now I'm going to hype Ivan up just a little bit. So a little more about Ivan. So you may have seen he's shaking his head at me now. Ivan is awesome. He is an associate investment advisor with TD Private Wealth. He's primarily responsible for portfolio strategy, investment research, and trading. He works closely with clients to create and implement a variety of investment strategies. He's a Carleton University graduate, go Ravens, for anyone who's also a grad. And he's been working in the finance industry since 2009. In addition to his BA, he also holds a certified financial planner and chartered investment manager designations. So needless to say, Ivan is definitely a pro in his industry, and we're very lucky to have him here today. So without further ado, I'm going to hand it over to you, Ivan.
Thanks, Liv. I appreciate it. Thank you, everyone, for joining. It should be fun today. So I'll just clarify, I wouldn't say I'm an expert. I'm a curious guy. I like to scratch itches and learn, a diverse set of skills. And investing is a great place to do that because things are always changing. And today's discussion, I think, is on point with that theme. Cryptocurrency. And really just, diving into an evolution that we're seeing where technology is interplaying with, finance as we used to know it, back over the last, let's say, 2 centuries. So today should be a lot of fun. Thank you for having me. So the plan for today, I'll tell you really openly and honestly, I'm still learning a lot about cryptocurrency. I thought this was a great way to just sort of supplement the work I do on my own. We're going to keep it pretty, pretty intro level. I'm sure there's going to be people in the audience today that know more than I do about it. So in the Q&A, we can get in some good discussion, and I'll encourage people to throw questions our way, and perhaps they could take part in some of the discussion. And so, just a couple of points, as Liv said, I really have to be careful. I can't give specific investment advice to people, but today we're going to keep it general, and I'm going to encourage everyone to build off of this. Hopefully there's going to be some useful information, and you could take that in your own research and learn a little bit more about this fascinating part of finance. So let's dive in. I've built a little boring PowerPoint. I think it's just going to help us stay on point and sort of structure the discussion a little bit. I'm going to share that with you in just a moment's time, and then we'll go through this point by point. So just give me a second here. We're going to get this up and running. So let's just get that shared screen. Hopefully the computer works with me. All right. Now, I am not a PowerPoint pro, so to speak, so I'm going to do my very best. Let's see if we can get this up and running. And we're going to go to present mode. Where are you? All right, so here we go. So cryptocurrency, where to start? So, I mean, at its core, cryptocurrency is a digital currency. If we compare that to the currencies we know, like the Canadian dollar or the US dollar or the euro, the big difference with cryptocurrencies is digital. So, standard currencies were more physical in nature, coins, bullion, gold bullion back in the day, also paper currency, and they were generally issued by governments and central banks. And so what happened is money enters the monetary system, so it goes through banks, and then it gets distributed into the economy. Digital currencies sort of totally different. When we look at digital currencies, it's totally decentralized, or I should say cryptocurrencies. They're totally decentralized. There's no central actor that controls it. And that's a really neat feature. They use like an online or digital ledger, sort of known as blockchain. We'll get into that in a moment. But what that does is it creates a lot of strong security that's underpinned by this concept of cryptography. And that secures different online transactions. So it's quite a bit different. When we think about regular money, where governments have a lot of control, cryptocurrency is really the antithesis of that. Very little control, far more open, more transparent, and arguably some would say more secure, but that's to be discussed. So, why would we want a digital currency? Well, I think it's sort of part of the evolution of the world, really. We look at how things progress and the role of technology in all parts of our lives. So why not apply that logic to something like currencies? And so, they can be used for things like buying goods or services. I think there's a famous story of a person that bought a pizza with Bitcoin way back when, maybe 2009, 2010. I think that pizza in today's Bitcoin dollars is probably worth a few $1 million. But the long and short of it is it's a way that we can interact by buying and selling goods and services. It could also be a store of value. If we buy a cryptocurrency and it goes up in value over time, that store of value can benefit the holders of it, or the owners of it, in their lives in the future state. And then I think a lot of people sort of go on this last point is often a digital currencies can be speculated on for the purpose of profiting on those price movements. And my guess is most people get interested in crypto based on that. And it's not a bad thing. I think, that's part of our minds that sort of attract to the idea of like winning a lotto or, making a lot of money. But I think there's a lot more to this, and we don't. To be fair, I think someone interested in cryptocurrency should really spend a lot of time learning more about the technology and how that might be applicable, rather than just focusing on the movement of the price. So let's dive in a little further here. So let's go basics of crypto. So this is my sort of assessment, is what I would refer to the basics. I think this is a subjective, comment, because, someone that knows a lot more might say this is, overly simplistic, but I'm trying to keep this really, really, foundational, so that when the audience is listening, that those that have never heard of any of this, that they're going to have something they can latch onto. So, the foundation of cryptocurrency is really a technology that's known as blockchain. And that sounds really fancy, but I would argue this is probably the coolest part of cryptocurrencies and what piqued my interest. And really what these cryptos are is they're this decentralized network, which is across a vast array of computer systems. And they're linked together by the blockchain, which acts as a bit of a transparent ledger for transactions. So if we sort of think about that, the benefits of this is everyone sort of can see what is occurring on this blockchain. It's immutable, so it cannot be altered. Once transactions occur on a blockchain, they're more or less closed off, and they're protected by something that's called cryptography. I believe cryptology is the type of math that's used, but it's a way that we encrypt or we try to secure data against other people altering it or understanding it. And really any asset, whether it's a tangible thing like a piece of art or a non-tangible thing like perhaps an NFT, a non-fungible token, they can be tracked and traded on blockchains. So it's a really neat type of foundational idea where we look at this, you picture a chain, and the actors are the people that are interacting with chain. They're miners. They're trying to mine Bitcoin, which is more or less an algorithm, a mathematical algorithm that they've got to crack. And as they go through this, they're also doing a function where they are verifying transactions. And so what happens is this chain is broken down into blocks. Each block is going to have data on a transaction. So maybe, I sell a piece of art to somebody. Well, it's going to capture who sold it, who bought it, what was the art, what was the tendered exchange. So maybe we paid Bitcoin, we're going to put how much Bitcoin, and then it's locked in this block. It's sealed, it can't be altered, and the chain continues. And is this type of transparency, this sort of open and sharedness, which makes the blockchain a really neat technology and really what I think as the foundation of cryptocurrencies. So the different types of crypto, I've referenced Bitcoin a couple of times. I'll be the first to tell you, I don't know all the different cryptos. I've really tried to focus on some of the bigger applications. I went quickly on a couple of the larger websites and got a sense of how many cryptos are there. I think right now, I think this data was as of mid-May, we're looking at least 10,000 different cryptocurrencies globally. That same data point around mid-May, let's call it the market value of all those cryptocurrencies was about 1.7 trillion. But I think if you went back a couple of months, it was over $2 trillion. So this market has a lot of heft to it. When we look at it in relation to stock markets or bond markets, it's still tiny, like really, really minuscule. But I think it's important to note that this is no joke. Like these are really big sums of money, and this is starting to have an impact on the world around us. So new cryptos or cryptocurrencies are generally brought to the market via something called an ICO, an initial coin offering. And effectively what this is it's sort of bringing this coin to the market, it's setting some sort of price, and then it's allowing participants in the market to buy and sell it, which will influence the price. When we look at the largest, most popular of the cryptos, I would say Bitcoin and Ethereum are the two biggies. I'm not going to get into too much of those two specifics, but I would say that this would be a good spot to start learning about them. I'm sure some people have seen the Dogecoin, which is, really an incredible story. This is a coin that was created more or less as a farce or as a satirical view of Bitcoin. And effectively, it's sort of blown up in popular culture, and now sports, I think, quite a hefty market value, where it's probably in the top 10 of largest cryptocurrencies. So, the point of this is there's lots of different cryptos. There's a massive amount of market value behind those cryptos. As we'll talk about a little later, I think those that are entering the market that don't have, a very, myopic or specific knowledge of what the individual cryptos, these smaller ones are, I'd say be careful. Probably start by learning a little bit more about the big ones. From there, you can distill into some more specifics about smaller coins. So, what's all the fuss about? I think this is so important because, you talk to 10 people on the crypto world. And you're going to maybe get 10 different reasons why they think this is amazing. One of the points before I get into these little talking points, or one of the things I think is important as an investor, always try to be pragmatic and be objective as you can. Crypto, along with many different assets, can invoke very dogmatic views where we simply sort of buy into this vision, this narrative, this story, and we can lose sight or choose to ignore all the other bits of data that might also be relevant. So why I'm saying this is, we don't know what the future has in store for cryptos, really for anything. That's the nature of the world, that's the nature of life. So I think we always have to have a critical eye. Don't drink the proverbial Kool-Aid all the time. Do some research. Understand what you're getting into. And accordingly, I think as an investor, think about risk and return. And we're going to get back to that in a bit. So going to, what's all the fuss about? Well, I'm going to go back to blockchain. I think blockchain is probably one of the coolest bits of technology that I've seen as it relates to currencies and payments, because this is a new way that we can interact with each other in the commercial sense. If we think about the idea of wiring money from one place in the world to the next, you have to go to the bank. You have to have the bank facilitate it. There's going to be fees involved. It can take a couple of days. It's not necessarily an easy process. Whereas, sort of theoretically on the blockchain, this can be done very quickly with almost no cost. And it can transfer this asset anywhere in the world as long as they're on the network. And it can be done so with quite a bit of ease. So I think, this lack of friction that the blockchain presents relative to the old way of moving money, of payments, I think this is something that deserves the attention and the fuss. Building off that, it does present a more secure, highly transparent processing and recording system for payments. Believe it or not, a lot of the way that we track these datas, what's in bank accounts, what's in investment accounts, the movement of money, it's very manual in nature. And a lot of the banking industry still relies on very outdated modes of tracking these ledger systems. So this technology, this blockchain technology, this offers a solution to it. And in fact, we're already seeing major institutions implementing their own types of cryptocurrency / blockchain technology, both at the government level and in terms of companies. Now, if you sort of think about that, it's not that surprising because, another form of a sort of cryptocurrency, although this one's not crypto, but I want to convey that this is not sort of a new idea. Think about casino chips. Casino chips in theory are like a cryptocurrency, but they're not digital. So, we think about this, casino issues these chips, they're backed by money. You can buy some of the chips, you gamble with the chips, you do what you will with them, and you can convert them back. Well, the same idea sort of comes into play with cryptocurrencies, except they're digital. So, seeing companies coming out with types of blockchain technologies, even governments, I think it actually is just an extension of things we've already been doing, and we're going to see a lot more development in this area. Now, another sort of key talking point on cryptos is the lack of central bank or government influence. People really do view this as a positive characteristic. I think it actually cuts both ways. I don't know that we could say it's totally positive or totally negative. But one of the things that people which view this as positive would argue is, well, historically, one of the problems with fiat currency, fiat is money that's issued by governments. And effectively, one of the problems is it gets its buying power over time gets reduced via this mechanism called inflation. The cost of goods around that currency goes up. In theory, what we see with cryptos, that might not happen, at least not at the same extent. Now, in terms of governments and regular money, they can influence inflation. They do that via monetary policy, also via fiscal policy. There's no such thing in the crypto landscape. Now, this might change, it might evolve. I'm not sure of that. But I do think that is an important point in looking at one of the benefits of this. Now, if you sort of think about this in relation to the Canadian economy or the US economy, you might say, well, I'm pretty comfortable with my Canadian dollars, US dollars. But put yourself in the shoes of someone living in Turkey or Venezuela, maybe even somewhere like South Korea, where they've had more trouble with their fiscal and monetary systems, where they've had massive hyperinflation, where their dollars are worth less and less every day. It all of a sudden starts to look pretty interesting. I can buy this digital currency. I don't have to worry about inflation. In theory, I could have it with me on a little chip. I can go wherever I want with it. I don't have to be fixed in one place. So you could see how there are some very positive parts of this sort of narrative as to why cryptos are important in terms of not having the overview of a government. Now, on the other side of that, they're very unregulated. So if something goes wrong, who's going to bail out if there's crisis? Like how does the interplay with this currency and the individual holders, how does this work during times when things might going wrong? For instance, what if you get hacked or robbed? How are these things going to be dealt with? We don't totally know, and I don't have all the answers, but I think, again, we got to look holistically. We got to look at that big picture and not just see the one side of the argument. We got to look at both sides of the coin. And then I think a lot of the fuss, I'm going to go back to this as well, prices have gone up quite a bit. If Bitcoin or Ethereum or any of these cryptos were increasing in value by 1% a year or something like that, I don't think most of us would be as interested in it. I think that's a natural, honest assessment of it. But I do think that, we have to be really mindful when we see this type of speculative behavior at times, these large rapid price increases, because it can cause us to sort of think in ways which might not be logical or in our best or in our well-being. So while it's fun to see it, I think we also have to be very mindful that that might not always be the case. So let's talk a little bit about buying and selling cryptocurrencies. So this is a little different than opening, let's say, like a discount brokerage account, which you can buy stocks and bonds, because you can't technically buy a Bitcoin or the Ethereum or one of those cryptos directly in your RSP account. Now, you can do this sort of indirectly, but if you want to own it directly, if you want to trade, you're going to need what's known as a digital, or let's call it a wallet. And that's really a digital app that'll hold the currency. Now, a lot of the time, your digital wallet is going to be linked to a crypto exchange. Could be something like Coinbase, could be Kraken. There's a variety of it. Essentially, what happens is you transfer fiat currency, your Canadian dollars, US dollars, and you buy crypto in those accounts. You can trade it. It'll be held in those accounts. I referenced Coinbase. I think they're one of the largest exchanges, so that's a well-known one. You can look into that. You can learn a little bit more about what is entailed in opening an account and transferring money over. I would argue, if I'm going to be sort of holding these types of assets, I would buy the biggest and safest types of wallets. I would focus on the biggest exchanges. We have seen through history some risks that have occurred when sort of exchanges have been hacked, where wallets have been taken hostage or stolen. So we do need to be mindful of that. Now, as I referenced, you can also buy exposure to major cryptocurrencies via ETFs, exchange traded funds. I talked about that before in a presentation. And essentially what that is you're just tracking the value of the underlying crypto, and you're going to hold it in an account like an RSP or a TFSA. The drawback in that, though, is you do pay a fee to these people that are creating the ETFs. And those fees can range from 1 to 1.5%, which it's not, that's not trivial. That's fairly material the longer you hold it. So you want to be aware of that. If you're more comfortable doing it, in a brokerage account, then maybe that fee is worth it. Otherwise, you might say, let's just go directly to the source and open a wallet with a digital exchange, and you can hold those currencies in that application. So let's talk a little bit more on risk, because I think this is really important in the context of investing. This is more general, but I spend a lot of time thinking about risk because I think risk underpins everything. Everything in life is a trade-off. If we want safety, we're going to get usually certain types of outcomes. If we want, less safety, more aggression, we might get other types of outcomes. And this is all sort of predicated on the idea that the future is unpredictable. So let's go back to my comment about being dogmatic or only looking at one side of an argument that this can only be a good thing. It might be the case, but the truth is no one really knows. This is very much an experiment that's unfolding in real time. And part of that, if we're going to be real with ourselves, we have to understand that there are some versions of the future where this might not work out as well as we thought, where some of our prior narratives or beliefs may not actually come to fruition. And because of that, I think we always have to manage the idea of risk, where more things can happen than will happen. And that unpredictability is important. So if we sort of think about, well, why would crypto give us better returns? That's a pretty loaded question. I think there's a lot of factors involved, but I like to always boil it down as, well, where there's more risk, there's more potential return. Doesn't mean you're going to get more return, but more potential return. So if you bought Dogecoin at half of a penny and now it's at 40 cents, you've done well, but that coin in theory maybe isn't worth anything. And so there's quite a bit of risk that at any given time, you could lose all of that. So always balance that risk and return. If we sort of think about that in terms of crypto, I think we have to go back to a couple of major points. One, it's very much an unregulated asset class. So I've mentioned Bitcoin, I've mentioned Ethereum, Dogecoin. There are thousands others. And I'm going to go ahead and say that a lot of them are going to be absolutely worthless. There are a lot of people that see the benefits that crypto is giving the world or potentially giving the world. But there's a lot of folks out there that are just out there to make money off of others. And so they're going to create, let's say, different coins. They're going to launch ICOs, the initial coin offerings, with the sole intention of sort of getting people to buy in so they can dump out their stake and take a profit. We call that a pump and dump scheme. And there's a lot of that going on. We know that because the regulators in the US and other countries have already started to crack down on these. But as an investor, it's important to think about that. Because while you might be tempted, you hear a great story about crypto ABC and it's going to change the world, it's going to the moon, or whatever the case may be. The reality is, unless you do some due diligence, you do some research, you ask yourself, like, who's selling the crypto? Is it reputable? Who's investing in it? What are you actually buying? Like, what is the underlying asset you're trying to buy? Is this currency already developed, or are you just funding sort of the development of it? All of these things need to be considered in doing your due diligence. And then, the last part is, where are you holding them? How secure is it? Theft is a real issue here. We have to make sure that we're doing everything we can to protect ourselves. Because again, this is not like opening a bank account. This is almost a bit more of the Wild West in some regards. It's changing for the better. But as investors, we have to be really careful. If I can leave you with one point on risk, I would say, and then we'll open it up. I actually do think that cryptos are a fascinating evolution of the finance field. I think in many ways they should be here to stay. I'm speaking more to some of the larger ones because I think something like Bitcoin or Ethereum, we're already starting to see a little bit of utility for these. There's a long way to go. But if I'm a young person right now and I'm looking at the world around me, I would say, well, technology is changing everything. It's having a massive impact. And one of the things that I've noted is we're often as humans, I would say, like, we often don't really get a sense of the scale and scope of change that technology offers. Look at, how Amazon or Google or Facebook or Uber or Twitter, I mean, there are so many implications, so many of these instances where companies bring a technology forth. And, at first it seems like it's trivial, but then it changes the world and the way we live in it. And crypto could very well be like that. So I would urge people to do due diligence. Don't get swept up in the emotion and the euphoria. Ask yourself, what am I willing to risk, knowing that I could lose everything? Don't get dogmatic about it. Don't feel like this is an only win scenario. Understand that there is risk there, and take a long-term view. So that might be buying a little bit of Bitcoin or Ethereum in conjunction with things that are in your RSPs, stocks, bonds, saving for your first home, etc., and keeping this other sort of higher risk investment on the side, and just a long-term view that if something comes of this, I'm going to be able to benefit. But if I lose everything, it's not going to change my life. And I think this group of students is a great sort of audience to say, you're at a stage in life now where your earning power in theory is just going to go up. So to make some higher risk bets right now and do so in a prudent manner, I think makes a lot of sense, because even if you lose $1,000 now, in the grand scheme of things, this is the best time to do that, to learn, from those mistakes, and put yourself in a position where something big might happen. As time goes on, you're going to forget about losing the 1,000 if that's what happened. But if this turns into something big, if it's like buying Microsoft, 5-10 years after it was established, this could be life-changing type of wealth for some people. So, be careful, be mindful, do your due diligence, but, don't be scared. Technology is changing the world. We know that. I don't think that's going away. And while I don't know what the future will hold, I think that good investors have open minds. They research new and different things. And effectively, they oftentimes are some of the first people that go into new assets, and with, understanding that, yes, I could lose it all, but, the upside might be many times more. So if we can balance that risk and return, it's not necessarily a bad thing. All right, so I think I've talked enough. I've talked probably too much. So I'm going to stop sharing now. And why don't we open up the floor to questions, Q&A, whatever you guys want to do.
Awesome. Thank you so much, Ivan. That was great. And I really appreciate how open and honest and like risk adverse you are. It's such realistic advice and information. So I think some of the audience appreciate that too. I saw a few like thank yous coming in. So that was really nice to see. So I do have our first question. I don't see any hands raised at this point, but our first question from Linda. So thank you, Linda. In your opinion, what is the likelihood that a cryptocurrency will be used as a form of payment and evolve into a currency instead of remaining as a commodity?
That's a great question.
Yeah.
And I'll be the first to say I don't think that there's an easy answer to that. I think it's multifaceted. So one of the things I think we're already starting to see this occur. It's just on a smaller level. So one of the issues that I would say with, let's say, Bitcoin, I'm going to use this as an example. We can use it for payments, but the weird thing with it as a currency and as a payment mechanism at this stage is there's a lot of volatility in the price. It moves a lot. So if we think about going to buy a loaf of bread, from the moment we grab the bread off the shelf to the point in time when we get to the counter to pay for it, that price may have fluctuated quite drastically. And that creates some practical problems. It doesn't mean that that's like a game breaker. It's just that practically speaking, there are some impediments to this. So, to the extent that we're going to see this evolution where cryptocurrencies are going to replace existing systems, I think we might still be a ways off, but over time, I think we're going to move in that direction. One of the things that is important to note is, governments, I don't think are going to be so keen to lose control of the monetary process in terms of, issuing and maintaining their own currencies. So there are impediments, but what we might find is that we're going to have, the old world and the new world start to merge ever so closer. That's where I just don't know. And I don't know if it's going to be a Bitcoin or something else, but I think we're going to see those worlds get a lot closer. They're likely going to collide. And a simple example, Visa now is facilitating payment mechanisms using underlying cryptocurrencies and I believe stable coins or a version of stable coins. So we're starting to see a little bit of that. I don't know, when.
Okay, but it might be coming. It seems like it's on that trajectory. So that's interesting. Awesome. Great question. Thank you, Linda. Now, I have another question here. It's a bit of a long one, so I'm going to read it out, and maybe my colleague Bonnie could kind of place the main question in the chat. So Ivan, I'm going to read that out now. So money is known to serve three primary functions: medium of exchange, unit of account, and store of value. Some analysis of cryptocurrency concludes that crypto does serve as a medium of exchange, but falls short in satisfying in the other two functions, which are unit of account and store of value, because of the volatile nature of it, which we've discussed. In terms of the looming question of whether crypto will one day replace fiat money, what is your assessment, and how do you think crypto can overcome the two shortcomings if they were eventually to replace money as we know it? So we touched on that a little bit, but it is a different kind of angle to the question for sure.
That's a great question, and I'm afraid I don't. Yeah, I don't have the answer. I don't think anyone does.
Okay.
But I think one of the things, like, we're using some loaded concepts. I mean, the store of value. How does value come about? I think these are things where if we think about it honestly with ourselves, there's big assumptions and leaps of faith being made. I mean, what gives the US dollar value? Some would say it's the ability to tax the population. Others will say having a military. Like, there's a lot of different things that can imply a value. And then that value is always in relation to other things. Like Bitcoin, I just use, like, Bitcoin gets quoted in USD, in US dollars or Canadian dollars. So its value, while there might be something intrinsic there, again, I don't know what that intrinsic is, it's often in relation to something else. So, I think a big problem does go back to the volatility, and that was implied in the nature. And I don't know. Now, there's been an evolution. There's things called stable coins, which are like a proxy of an underlying crypto that are tied to, let's say, currencies. And the idea with stable coins, I'm new to this, but the idea of stable coins is really they give you like literally a more stable version of this cryptocurrency that you could use for exchange purposes. What I believe will be the case is the underlying technology is going to be applied to national types of cryptocurrencies. I think that you're going to see, like, whether it's the US dollar, the Canadian dollar, I think central banks are already working on sort of utilizing these for payments and transfers. but we don't know. We don't. And will it totally replace fiat money? I have a hard time believing that right now, because that would imply likely that governments are going to lose some important levers of control for their economy. And I don't know what that obstacle looks like. That's at a higher level than I'm able to comment on.
Awesome. Great. That was a great question. And thank you for that. So kind of going
Great
on,
question.
yeah, that was real. I was a little nervous reading it. I'm not going to lie. It's like, cool boy. So it was good. Okay. So I have a similar question that kind of ties in with the theme we're discussing right now. But this is a great question. What are the factors affecting the rate of cryptocurrency? Some of the factors. I know there could be many.
Now the rate, I don't like that is the rate, like the rate of change in the price, the rate and change of supply. We could talk about both.
We could touch on both, maybe.
Okay. So, I mean, price is very much, I think, supply and demand. But prices are fluid, they're changing, and the madness of crowds is real.
Right.
So, is Bitcoin should it be at 30 or 60? I don't
Right.
know,
Right.
because we can't know that. I now on the supply thing, this is I'll tell you what I love about Bitcoin a lot, and it's not to diminish anything else, because I think Ethereum has a lot of really neat uses, actually practical uses. But with Bitcoin, you have a supply which is constrained; it's finite.
Okay.
We can, after a certain point, we cannot have more Bitcoin. That in itself might create the notion of intrinsic value, no different than gold. I mean, gold is a store of value, we call it, right? But its uses in industrial purposes and for jewelry is actually quite small. It's more or less a shiny rock that historically we've given some value to. There's finite elements of it, but it's not that finite. So, to the rate of price changes, I think, is very much determined by supply and demand in the markets, people wanting to buy it, they're interested in it, etc. In terms of the number of Bitcoin, that's related to mining. So every day there's miners out there that are trying to crack this algorithm which creates Bitcoin, and they're trying. I think the finite limit is about 21 million Bitcoin.
Okay.
So we're working towards that now. As more are mined, the algorithm becomes far more difficult. So mining becomes far more intensive, time-wise, energy usage-wise. And that actually does create supply constraints, which can influence the rate of change of supply and therefore the price. Now, I'm probably missing other factors involved. Elon Musk is probably influencing this a lot. He throws a tweet out there, and the price moves. So that's my assessment. I would dig into that a little more. There's probably more variables at play.
Absolutely. Yeah. And that's great advice too. It's always important to, especially with things like this, do your own research and talk to many different folks. So I love that. Great. So the next question, and this ties into doing your own research and learning more and that type of thing. Do you know any courses or anything you can refer for beginners who are looking at getting more information?
Sadly, not that I know of. I've had to do the old bootstrap method. I call it sort of scuttlebutt, which is you literally you just go, you talk to people, read. I mean, one great area to learn, social media, Twitter. Twitter's called FinTwit. FinTwit is like financial Twitter. They're similar with crypto. But getting out, learning, I would say the internet's a great place. You got to be really mindful where you're pulling it from. So one of the areas I've actually really liked is I use a site or an app called Medium. You've probably heard of it. So you can actually choose crypto as one of the topics that you're interested in, and they're going to filter data, which is, it's not always great, but often it is somewhat peer reviewed. These are legit sources that are going to speak to it. So I think right now we're still early days. I don't know of any specific courses, but it's changing quick. And even by the time I'm done saying this, there might be something new. I'm not sure.
Absolutely. Yeah, that's great advice too. Check all your resources you can. Bonnie, thank you so much, has put the Medium website in the chat, which is great. And just for everyone, we've also put a link to Ivan's LinkedIn. If you'd like to connect with him on LinkedIn, definitely, endorse Ivan, because that's great. And he's taken out so much time today, which is wonderful. And you can connect with him there as well. But yeah, do your own research and talk to lots of people. And maybe if you're someone who hasn't been as involved in your bank, and maybe you don't have a financial advisor, maybe it's time to look into one. There are lots of different options out there. Okay.
If I could jump in for 1 second, I just want on that point. This is a very divisive subject, and a
Oh,
lot
is
of
it?
people in my industry, I would say,
Yeah.
are not as open as others.
Okay.
Let's call it.
Okay.
And I
That's good
understand
to know.
why. If you don't understand stuff, if it's new, you shouldn't be giving opinions on it, right?
Okay.
And so I understand it entirely. But I would say, really put the onus on yourself here. Own this. If you're interested in it, do the research. If people are looking for more information, obviously we can try to point them in the right direction.
Yep.
But going to a bank and talking to your financial advisor, you might not get a ton of information. I'm just being totally transparent because it's hard for a lot of people to speak about it. It's new. It's very, very unique. And it is quite technical, right? It's not like buying, I don't know, TD Bank stock. It is slightly different. So, try to focus your attention on your own research, rather than going to a bank and hoping to get answers.
Right. That's a good point. And this is all very new to a lot of people in here and myself as well. So that's great advice. The next question I have is, what do you think about holding crypto in crypto.com? Do you know much about crypto.com?
I don't know crypto.com, so I can't even answer that. I'm sorry.
Okay.
Just as I said before, be very careful where you're holding it. It's no joke. This is they can be stolen. I mean, here's an example, just because we talked about it, it's decentralized, it's secure. I don't know if everyone saw in the news, there was this giant hack of Colonial Pipelines United States. This is a company that controls a vast amount of pipelines on the eastern seaboard of the United States for oil and gas. They were hacked, and there was a ransom for cryptocurrency. It was paid. I think it was like $90 million worth. A couple of days ago, the FBI announced they've retrieved it all. They found the account where it went into. They were able to retrieve all of that crypto that was paid out to the hackers. So we don't know a lot of details, but it caught my eye because, wow, that doesn't sound secure. Like if they can walk in and grab that, are there things that we're not aware of? So just know, we got to just be really careful. I don't know crypto.com. I'm sorry, but do a ton of research. Do a ton of research, and I would say stick with the big ones if we can.
That's great advice. That's smart. Thank you. Awesome. So this is a really great question and a super practical one. So thank you for asking this to our next participant. Can we get any information on how taxes are being dealt with and the best way to avoid or how to properly kind of manage tax? And then in brackets they wrote, I'm guessing just holding the token for the long haul, ? So.
Yeah, that's a great, so that would avoid it, right? Because these do not create income for you. I should be careful. There are now new, people can learn about this via DeFi, which is a company, a fintech company, which is actually creating like Bitcoin-based savings accounts or things like that. But that's beyond the purview of this. Right. For most people buying a Bitcoin, it's not creating income for you. So to the extent that you buy it, hold it, don't do anything, there's really no impact to tax. Okay. If you sell at a profit, you report it. I'll give you an example. I know some of these exchanges are not as strict about it. One I know of, I think it's called Kraken, is a great exchange. I believe I saw some information from them that they don't actually send the data directly to the authorities, or at least they didn't at that time. But let me tell you, CRA, IRS, everyone's cracking down. And you do not want to try to pull a quick one, because maybe you get away with it, and in 2 or 3 years' time you get caught. The penalty plus interest, it's just not worth it. So, if I'm buying it personally, I'm buying it to hold on to it for a long time. It really is have a long-term vision if there's something to this, because trading is tough. I think you can lose your shirt really quickly with trading. It's easier to buy and hold if you're buying good quality. And in that case, it makes it easier from a tax perspective as well.
Absolutely. And just to reiterate and yell it louder for those in the back, CRA is not messing around. So great. Thank you for that question. The next question we have is, and this is a great question, and this is something I'll just go ahead and ask it, but what is the general procedure or process for getting into investing in cryptocurrency? I think we touched a little bit on it in your presentation. Yeah.
Well, I think practically it starts with figuring out where you're going to do it. So if that's going to be in a digital wallet, via cryptocurrency exchange, or maybe you're going to do it in your TFSA via this ETF. So start there.
Right.
I mean, I would, beyond that, you have to start to learn about what you're buying. It's like the fundamental rule of investing. If you don't understand it, don't buy it. It just doesn't make any sense to me to do that. So, understand what it's all about. I'm of the opinion of something like Bitcoin or Ethereum. These are big, obviously, but one of the things that I like about them is they've been around for a while. I mean, Bitcoin, I believe, was created in 2009. And we've seen this steady appreciation of it. But what I like about it is the longer that it's in play, and arguably the higher the prices go, I think it's sort of a bit of a self-fulfilling prophecy. It gives it credit. We're starting to see companies that are starting to buy a little bit of cryptocurrency to keep on their balance sheets. Central banks are studying it. I mean, the more that this momentum builds, the more it becomes accepted. And this often happens with technology. This is like, look at the internet. Software is eating the world. This is how it goes. So starting to understand that, that is probably, what is a Bitcoin? Why do I want to buy that as opposed to Ethereum? And put the prices aside. Don't let price be the driving factor, because you're already sunk in the ship. Process over outcome, I say often. And I think the process there is you got to understand what you're buying and why you're buying it, so that when it does fall 30 or 40 or 50 or 60 or 70%, that why you own it. And that you're not going to just sell because you're like, oh, well, the price is down now, so I'm going to sell. You really do need to understand it. So I would say, where are you going to do it and then what are you going to buy? You need to spend the time to understand that. Otherwise, you're just completely speculating. And I'm going to go ahead and say that, over time, that's just not going to end well. Who knows? But I wouldn't put that in the high probability outcome.
Absolutely. Yeah, that's a great point. And that's kind of a great actionable, like the two places to start to do your research, where and which crypto. And that's kind of a really great basic.
And if I could just understand how much you're willing to lose, because it is high risk. Don't kid yourself. Like, go in with some clear parameters around what you're trying to accomplish. So if you don't mind putting $1,000 in, and you don't mind losing $1,000, then that's data for you. But to take money that you had set aside to buy a house and throw it in crypto, hoping to triple it, that to me starts to become a little bit more problematic behavior. And I'll tell you what, when things turn sour on you under those circumstances, you're not going to be thinking logically. Like, it's a painful process.
Yeah.
So be mindful of that.
That's great advice. Thank you. All right. So we have about 10-ish more minutes left in the session, and we have a couple questions left. So I'll just kind of power through them. And you've kind of touched on this throughout your presentation and throughout the question period, but we do have a question. Is crypto really decentralized?
Yeah, conspiracy theory about conspiracy theory. So yeah, it is. I mean, it is. Now, how are we going to define it? So the blockchain is decentralized. That's the very nature of it. The sum is greater than the parts. So in that regard, I think it is fairly decentralized. Now, if there are people that know way more about this, sorry if I don't get that spot on, but I think that's fair. That to say, it's hard to know, what does decentralization mean in the context of all the different players involved. So I don't know this as the truth, but I have read from fairly, credible sources that there are some very big holders of Bitcoin that have quite a bit of influence on the price. So, the movements of the price are dictated by the actors, right? Whoever's getting into it. And there might be a centralized group that owns quite a bit of it, which can I don't want to say manipulate, but that can influence the price.
Right.
I do note that just a couple of weeks ago, actually, Elon Musk and a few others that are fairly high profile advocates have started to talk about a sort of committee where there would be, a governing council or something like that, which can overlook, the administration of cryptos or setting rules. Now, generally how it's worked though in crypto is it's like, it's all by not committee, but if there's changes that occur, it's verified by the number of people using it. So if there's going to be a change that occurs, let's say the algorithm or something like that, if enough people support it, it goes through. If they don't, it doesn't go through. Okay. And so, so that's where I go. This decentralized part of it, blockchain, yes, I believe that to be decentralized as it relates to price movements and some of the functionings of different cryptocurrencies. It might not be as decentralized as some think. I'm not an expert, so I can't get into those types of details.
Awesome. That's great. Thank you. All right. So this question, this is great, and I have no idea what it means. So I'm actually excited to learn something. So do you know the differences between proof of stake and proof of work?
So this is tying now into Ethereum, because I think Ethereum is big on this. So they're going into so this is like non-fungible tokens or art and stuff like that. I don't know this well enough. I'm actually in the midst of researching and learning more. But it is one of the utilities I believe that Ethereum brings to the table in terms of how do we interact in a buying and selling manner, in terms of I own something or I have a stake in something.
Right.
Sorry, I can't give you a better answer. I'm trying to learn more about this. It's just like, you have a fire hydrant of information. You're trying to like drink from it, or a fire hose. And it's just, there's a lot and it's changing quickly. So I'm sorry, I don't have an answer. I believe that's tied in with Ethereum because I understand that to be one of the utilities that they bring to the table there. My apologies.
Perfect. Thank you. And thank you for that question. The next one, and this is great because I think this is where kind of social media definitely has an influence. But the next question is, I've heard a lot about Wealthsimple. Would you say that Wealthsimple is a good platform for cryptocurrency, or maybe even just a platform that can handle cryptocurrency? And I mentioned social media because I've seen so many ads targeted, specifically to millennials, Gen Z. That's kind of Wealthsimple's platform, right?
Well, I got to think in the context of all the different options involved, it is as good as many. I mean, effectively, now, as I understand it, and I haven't dug into Wealthsimple in particular, it would function similar to, let's say, a brokerage account with a major bank. I'm not certain, and this others would know better because I haven't looked into it. There might be the application of buying Bitcoin directly. I'm just not 100% certain of. But I would say it's a reputable brand. I think they're doing wonderful things for the finance world. I respect them greatly. I mean, I work for a bank. I think what they're doing is well needed. It's about time that we have suitable options that are low cost, transparent, easy to use. I know, like, give an example in the US, Robinhood, which is something similar to a Wealthsimple. They do allow now the purchase of cryptos in certain states because these brokerages are still regulated by governments in Canada as well. It can vary a little place to place, but I think Wealthsimple is a great investment vehicle. And to the extent that they allow it, I think it's probably safe. Again, want to do some more due diligence there because I haven't really spent any time on their specific platform.
Awesome. Perfect. That's great. And just a reminder again, Ivan can't really provide specific information of what you should or shouldn't use. So the purpose of this is, to discuss legitimate platforms, but really you need to do that research too and figure out what's appropriate for your life and all of your investments. So we have about 3 questions left, and I think we can get through them. And I just want to quickly mention, someone asked in the chat, and in the Q&A, if this session would be available recorded after the fact. Yes, it will. It's going to be on our AC On Demand page, which we will put the link in the chat so that you can access that. So there is another question, and again, I'm not sure if you'll be able to answer this one, but which wallet do you prefer to use to hold crypto for a long period of time? Can't answer that one.
I can't answer that. Yeah, I
don't feel
pressure. I can't really answer it. I mean, just if you stick with the biggest ones, I think you're safest. I don't. I'm nervous to bring it up because I'm like many of you. I'm still relatively new to this, right? So I haven't done enough research on the various options that are available. I can speak personally that I've looked at Kraken and I've looked at Coinbase. I can't give you a recommendation beyond that. Those are 2 that I've looked into. So I'm sorry I can't do that, but do some more due diligence and stick with the biggest ones. I think that's your safest bet.
That's great. Thank you. Okay, 2 questions left. And this is a great question. Are there any other interesting projects you are aware of beside Bitcoin and Ethereum, small to medium cap companies?
So not cryptocurrencies, but I think I'm going to take this question, I'm going to run with it a tiny bit. So and because this actually does go into the world that I tend to spend more of my time in, which is I research companies and investment strategies. So there are knock-on effects from cryptocurrencies where, let's say you didn't want to buy a crypto for a variety of reasons. You might not be comfortable with it, you don't know enough. You can actually buy publicly traded companies which are a proxy for cryptos. Now, what I'm going to mention is not, I'm not telling you to go buy these. I'm just going to. So here's an example with crypto and mining. What do you need? This is all computer based, right? Well, you need chips. And in that type of mining, you need a lot of CPU power and GPU power. You need the software that goes into it. So, as an extension of that thinking, second derivative, I would say, well, look at the companies that make chips, semiconductors. Look at the semiconductor sector. A company like NVIDIA, which is the world's predominant GPU maker, graphics processing unit maker, their GPUs are heart and center in a lot of these mining farms that are out there. So that's an example of a company that has a very specific link, whose businesses will benefit. It's not pure play on crypto. It's definitely, you're going to touch on a lot of digitalization globally, but that's an idea. You can go to the actual manufacturers of chips, the companies that make them. These could be like your Intels, your Taiwan Semiconductors. There's a lot of this, right? So I would say there are other ways to invest if you wanted to broaden it out. And this is where, crypto is starting to meld with regular finance, because we're seeing a big amount of business that is tied to crypto. So you can think outside of the box in terms of investing as well. And that's where I think that's personally where I've actually done a little bit more in saying, I think this is just another notch of many different technological disruptions. So I'm going to go ahead and buy the picks and shovels of technological disruption, which might be things like semiconductors and the equipment to make them. Now, again, I'm not soliciting you to buy those, but I am saying do some research in it. There's some cool things going on in the margins as well.
Awesome. Great. That's great advice. And definitely, everyone needs to assess their own risk and do that research. So that's wonderful. Okay, so we're at our last question for the session, and we're right on time, which is fantastic. This participant, thank you for this presentation. So that's nice. Thank you for thanking for Ivan. I would like to know your opinion about the idea saying that it is too late to invest in Bitcoin in order to make significant capital appreciation. If you can answer it, you can't answer that.
Yeah, I can answer.
Okay.
It's just like, why is that? Why would that statement be relevant, right? That's the part I don't get. Why? Because it was at 60,000 or 30,000. Well, why can't it go to 50 million? This is where I'm trying to get at here. People are using a framing effect. This is a bias, a cognitive bias people do. They see prices in the past and they're framing everything against it. Well, Bitcoin was $100, now it's 50,000. It's so high, it can't possibly go any higher. And I see that all the time in everything. And then people will go back and they'll say, well, let's buy that 1 penny cryptocurrency, because if it goes to 60,000, then I'm going to be rich. But that lacks context. You're literally framing everything on some data points that might not even be relevant, right? So I would say that, that comment that was made, or that argument, is to say it can't be known. It cannot be known. Remember my comment on risk. More things can happen than will happen. The future is unpredictable. There's no way to know what's stopping Bitcoin from going to a cajillion dollars. I don't know. I made that up, obviously. But what I'm getting at here is that line of thinking, it might be true. I'm not saying it's not, it might be true, but it can also get you in a lot of trouble. Because as an example, I love this in the stock world. I'm going to use like companies, but Amazon at one point was like a, $300 stock, let's just say.
Right.
Okay. And it at one point, it was like a $10 stock. So all the easy gains are gone.
Right.
Well, now it's at like $3,600. Okay. Berkshire Hathaway, Warren Buffett's vehicle, at one point those shares were trading at $1,000 a share back in the 70s, their 80s. Now it's at like $400,000 a share.
That's
so
wild.
That's your mind tricking you. There might be some more to that I'm just not aware of, but purely based on where that price is, I don't think that's enough of an argument to say that one is a better or worse investment, because we don't know the future state of it, the rates of change involved. And I hope that helps, but don't, what I'm trying to tell people is don't get suckered in to buying things that are a penny because you think they might go to 60,000. They might not even be worth a penny. They might be worth, I don't know. But I'd rather you focus on like understanding the purpose, like what are you buying? Why do I think this could be useful? And then let the price deal with itself in time.
Right.
Don't base everything on price. That's where I see people get in more trouble than it's worth it, to be honest.
Gotcha. That's perfect. And that's great advice. So think quality, do your research, understand what you're investing in, why, and be careful of who's storing your crypto, the wallet.
Yeah, I mean, if I could just throw one thing, and this is technology in general, don't underestimate technology. I think the average age in this meeting is probably younger rather than older, let's say. I might even be amongst the oldest. But the world is changing quickly. Think about how much has changed in the last 10 years.
Mm-hmm.
And I'm going to go ahead and bet that the next 10 years are going to be even more mind blowing. And the world that my children grow up in is going to be, you won't even be able to understand that looking back at what it was like in the 90s or 2000s, right? So like many things in life, I think as a young person, we have an advantage. You have an advantage. You're seeing the world through a different set of lens. And one of the things I always go back to is don't underestimate how much things can and will change, right? So don't be scared off by this. And if you're talking to your, someone that's a lot older and they don't understand it, they're gonna throw mud on it all the time. And that's fine if it's not for them. But if you do the research and you're comfortable with it, you're managing the risk, don't be scared. This is a great time to take some risks in your lives. Again, within the context of what you can afford to do. It's a lot harder to take those risks when you're 50 or 60 than it is now. And so, like embrace it. If you're interested to jump into it, learn a lot about it, because I think this is going to benefit a lot of people going forward. And it has nothing to do with the price of Bitcoin. It's more you're learning, you're understanding the world and how it's changing, and that's where the value is, and that's where it gets me excited. I don't really care about the price of any of these. I just like to look at the future state of the world, and I get excited. It's going to be fun. I think it's going to be fun.
I love that. And I can feel your enthusiasm. And I think that's kind of the perfect part to kind of wrap it up on with that momentum. So I want to thank Ivan. Thank you so much. This session was so wonderful. You provided so much information. We really, really appreciate your time. Thank you to everyone who joined us today. I thought the questions were really fantastic. Yeah, Ivan too. That's great. And for anyone who wants to rewatch this session, we did mention it, but this will be available on the AC On Demand site. We'll put the link in the chat one more time so you have it. And there's tons of other really great videos you can watch there. I believe there's another video that Ivan has done with us previously, which is wonderful. Don't forget to check out the AC Hub site and check out more upcoming events. We've got lots of fun stuff planned for you. The next event we have coming up is how to grow your own food using kitchen scraps. So it's a different way. It's kind of cool, right? Yeah, it's a different way to look at food security and waste and zero waste living, if that's something you're interested in. So thanks again, Ivan. Thank you so much to our audience. Don't forget, everyone go eat lunch and drink tons of water, study hard, and have fun. Thanks, everyone.